the BEP formula to find out units, fixed cost per unit divided by contribution per unit. So the PV ratio formula is very simple, contribution per unit divided by selling per unit into 100. Variable cost cannot change, which is a constant. Okay, even fixed cost also not changing. The information is which is applicable for only selling price 30%. Hello everyone, a warm welcome to one and all. I am Natesh, lecturer in commerce, Vidhyaashram First Grade College, MYSURU, the Temple of Excellence. We are in the Unit 4, Section 3, 4th semester B.Ba Management Accounting. The chapter name is Marginal Costing, which is related to the marginal costing statement and the related formula. So, which is a marginal costing problems. Okay, in the last session also, which is related to statement. So, with the help of statement, how we are trying to find out contribution and sales. Okay, so there is a continuations problem here. So here the following is the data taken from the record of the company. So here the selling price per unit is given, rupees 20 is given. Okay, and the direct material cost per unit is 5 rupees is given, and the direct labor cost per unit is 3 rupees is given. Okay, and the variable overheads cost is 2 rupees is given. Now this three item which is coming under the variable. Okay, and the budgeted sales output, which is 80,000 units you are producing. Okay, so the fixed overheads cannot be changed, which is 4 lakh. If you want to find out fixed cost per unit, 4 lakh divided by 80,000 units, if you divide, so the rate per the fixed cost will be easily we can find out. Now, here there is two question. Find the BEP. Okay, the BEP in unit and BEP in sales, the PV ratio and the margin of safety. Okay, next there is one more question for calculate revised BEP. Okay, PV ratio and margin of safety. If the selling price, okay, increase 30%, the actual selling price is 20. Now the second question, which is first one is we are calculating based on the normal information. Okay, so after doing, so we are trying to go for second question, selling price will try to increase for 30% based on the question. Okay, last one, selling price per unit decrease 10%. Actual the selling price of okay, whatever which is given, we need to reduce 10%. Moving forward, the first one, whatever the information is there, we need to prepare the statement to find out what and all is required for the formula. So here the marginal cost statement, the sales value is given, selling price is given 20. I have written here. So why I am writing inner column? If there is more than two items, more than one items, I need to write in the inner column. So here the sales, there is no written, sales written is not there. Directly I am writing outside. Okay, so the cost per unit is given 20. From the sales we need to subtract the variable cost. Okay, the variable cost, one is direct material 5 rupees is given, the direct labor cost is 3, and variable overheads cost per unit is 2. So altogether we need to take a rate is given. So I have written here, okay, the material cost per unit 5, direct labor 3, and variable overheads 2. If you take the total, you are getting 10. So from this, according to format, we need to subtract for variable cost. So 20 minus 10, so the remaining whatever it is coming, no doubt, which is we call it as a contribution. Okay, so moving, after getting the contribution, we need to subtract the fixed cost. The fixed cost, the cost per unit is not given, but value is given 4 lakh. If you want to find out fixed cost per unit, it is very simple. So 80,000, 4 lakh divided by 80,000 units, if you divide, easily we can guess cost per fixed cost is 5 rupees. Okay, so from the contribution, if you subtract fixed cost, the remaining is a profit. Okay, so we are getting a positive sign, so we call it as a profit here. So moving for the first one, the question, it is clearly spelled, find out the BEP and PV ratio and margin of safety. The BEP formula to find out units, fixed cost per unit divided by contribution per unit. So fixed charge value is given. So directly we are writing 4 lakh. The contribution per unit, just now using the format, okay, statement, we got 10 rupees. Okay, so if you divide 40,000 units break even point means actually, so we are trying to break even point, which is nothing but there is no profit, there is no loss, so the total cost will equal to total sales. Okay, and moving for the break even value or sales, so nothing, the same formula, but just we need to multiply the selling price. Okay, there are three different formulas I have specified here. So either you can apply break even point using a fixed cost, fixed charge divided by contribution per unit into selling price. This formula is applicable for only to find out the break even point in units. If you try to multiply the selling price, easily we can get the break even sales. Fixed cost value is given 4 lakh. The contribution per unit is 10. The selling price which is given in the question 20. So 4 lakh into 20 divided by 10. Obviously we can get rupees 8 lakhs is your sales value, break even sales. Or you can apply one more formula, fixed expense divided by PV ratio. The PV ratio first we need to find out. So the PV ratio formula is very simple, contribution per unit divided by selling per unit into 100. So whatever the percentage is coming, so we need to consider here. Okay, now the contribution per unit we got 10 rupees. Okay, so divided by selling price which is given in the question 20. So 10 into 100 divided by 20, 50% we are getting. So obviously we can apply now after getting the fixed expenses 4 lakhs we are getting. So PV ratio we just know we got 50 into 100. Okay, so 4 lakh into 100 divided by 50. So same answer you are getting rupees 8 lakh. Or one more formula we can apply to find out the break even sales. So BEP in unit, in the last slides we got, see we have calculated 40,000 units we got. So just to multiply the selling price, BEP in unit in selling price. BEP unit after calculator we got 40,000 and the selling price 20. If you multiply, the same answer we are getting. Okay, so now there is one more formula to find out PV ratio. The first formula we got 50%. So there is one more formula, fixed overheads 4 lakh. Okay, divided by break even sales 8 lakh into 100, 50%. Okay, we are getting 50%. So now moving to in the question they clearly specified to find out PV ratio and margin of safety. So whatever we are doing now, which is without increasing or decreasing normal conditions. Margin of safety is very simple formula, actual sales minus break even sales. Actual sales which is given in the question, a number of unit 80,000 you are producing. Okay, and selling price per unit is 20. So 80 into 20 we are getting 16 lakhs. The break even sales, so just now we calculated 6 lakh. From this actual sales minus break even sales, so margin of safety we are getting 8 lakhs. So there is one more formula to find out margin of safety. Sales value. Okay, how we are getting sales value? Because unit into selling price. Okay, sales value, how to get the sales value? Number of unit into selling price. Okay, into PV ratio. So number of units 80,000 units, selling price is 20. If you multiply and take 50%, you have to calculate for the PV ratio. So now finally we are getting 8 lakh, the same answer we are getting. Here in the last slide till whatever the normal information based on the normal selling price only we are calculated. Now there is two questions which is given in the question. One is 30% increase in the selling price. Okay, only there is a changes in the selling price. Okay, so remaining fixed cost and variable cost cannot be changed. The information is applicable for only for selling price. Okay, so there is one more question. The 10% decrease in the selling price. So here the calculation, of course, if you try to increase or decrease, there is a changes in the BEP and PV ratio as well as margin of safety. So here the first question, if the selling price per unit increase by 30%, now old selling price which is there in the question 20, now increase 30% means obviously we can get 6 rupee. How we are getting 6 rupee? 20 into 30%, if you calculate, easily we can get 6 rupee. Now, if you add together, the price of the selling price is increased. Now the new selling price is at 26. Okay, so after getting the new selling price, either you are depending on the statement, margin of statement one more time if you can prepare, otherwise directly you know the formula. Contribution is equal to selling price minus variable cost. Variable cost cannot change, which is a constant. Okay, even fixed cost also not changing. The information is which is applicable for only selling price 30%. Okay, so immediately 26 minus 10. Now new selling price 26 minus 10. Now new contribution is 16. Obviously, now we need to do for revised BP, PV ratio, profit volume ratio, or margin of safety. The first one, PEP in unit, how we are finding? Fixed charge or fixed expense divided by contribution per unit. Fixed charge will 4 lakhs is given, divided by new contribution we got 16. If you divide 25,000 units we are getting. Okay, now we'll find out the break even in sales. The formula is same here. There are 3 types, 3 methods we can apply the formula, different formula. Fixed charge expense divided by contribution per unit into selling price, new selling price. Okay, so fixed charge 4 lakh divided by new contribution 16, new selling price is at 26. If you take the selling price, selling value, break even sales value 6 lakh 50,000 we are getting. Or one more formula, fixed expense divided by PV ratio. So the formula is having we need to find out PV ratio. So the PV ratio formula you can do for one more formula, PV ratio, how to find out here. So the PV ratio, contribution per unit 16 we got. New selling price 26 into 100, 61.54% we are getting. So the same thing we are applying here. 4 lakhs fixed expense divided by PV ratio 61.54 into 100. Same answer we are getting 6,50,000. Or one more formula we can apply to find out the value. So we know the break even point units we got around 25,000 units. So multiply with the selling price, new selling price. So 25,000 into 26 rupees, so 6,50,000, same answer we are getting. Either you can depend any one formula. Okay, so moving for, there is one more calculation per PV ratio, the same answer we are getting. Fixed overheads divided by break even sales into 100. Fixed overheads expense is given 4 lakh, the break even sales we got 6,50,000. Okay, so obviously we can get a 61.54%. So finally we are going for the margin of safety. Actual sales, the number of unit is 80,000. Okay, into new selling price 26. If you multiply, so you're getting 20 lakhs 80,000. Break even sales value we calculated 6,50,000. If you subtract the margin of safety 14 lakh 30,000. Okay, so moving for the next question. Selling price per unit decreased by 10%. So the old selling price I have written 20. So which is a decrease 10% means 2 rupee. Okay, 20 into 10% means you are getting 2 rupee. If you subtract the new selling price, revised selling price is 18. So again we need to find out a break even unit, break even sales, PV ratio, margin of safety. So revised contribution, the formula same. Revised selling price minus variable cost cannot be changed. Variable cost is not changing. So new selling price 18. 18 minus variable cost which is 10. So now contribution we are getting 8. Okay. So after getting all the information, we are trying to go for calculating a break-even unit, break-even sales, even PV ratio, okay, and margin of safety. So the first one, to find out the break-even unit, the fixed expense divided by contribution per unit. So contribution per unit, just now we got 8. Okay, so 4 lakhs divided by 4 lakh divided by 8. So 50,000 units we are getting. Either you can depend on this formula or one more formula. Fixed charge or fixed expense divided by contribution per unit into selling price. Okay, so fixed expense 4 lakhs is given, contribution 8 is given, selling price we got new selling price is 18. So obviously the 9 lakhs we are getting. Okay, the sales value. So one more formula to calculate. So the find out the PV ratio, because we know there are different formula we can apply according to your information. Okay. So the PV ratio, contribution per unit divided by selling price into 100. Contribution we got 8 divided by new selling price is 18. If you multiply 44.44% we are getting. Or you can apply one more formula to find out the PV ratio. So fixed overheads divided by say break-even sales value. So fixed overheads which is given 4 lakh divided by new break-even sales we are getting 9 lakhs. So obviously the same answer 44.44% we are getting. So finally we are trying to go for margin of safety, actual sales minus break-even sales. Actual sales here the number of units are 80,000, new selling price is 18. So if you multiply 20 lakhs 80,000, from this you need to subtract the break-even sales value. So finally we are getting 5,40,000. Keep on watch for next section. Thank you.